morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi here with my co-host Emily Parker, CoinDesk's Executive Director of Global Content. Good morning, Emily.
Good morning, Jen.
Always wonderful to see you so early in the morning. All right, let's take a look at the markets before we get into the news. The CoinDesk Bitcoin price XBX index is currently at 30,548, down almost 1%, holding steady above that 30K line, but failing to break 31,000 still. Let's see if Ether is following suit. The CoinDesk Ether price ETX index is at 1,881. Looking really similar to Bitcoin this morning, briefly breaking above that 1900 line yesterday afternoon and then coming back down. Let's see what's happening in the world of DeFi. The DFX CoinDesk's DeFi index is at 114. Emily, our top story this morning has to do with AI and Elon Musk. Of course, Elon Musk announced the debut of his new AI company, XAI, with the goal to, quote, understand the true nature of the universe. This news broke yesterday. There's a Twitter Spaces happening tomorrow to give us some more details. But what was your first reaction to this?
Skepticism, deep skepticism. I mean, for a few reasons. A, because, as we've seen before, this kind of like, just on the most basic level, putting aside the AI stuff, this kind of like corporate multitasking where you're trying to run several different companies at once often doesn't end well, A. And B, it just reminds me a little bit some of his rhetoric of his takeover of Twitter where, he was like, I don't like, Twitter is not free enough and it's not curious enough, so I will make sure that it is, right? And then we sort of see how that went, right? So, he's basically saying like, I don't like the direction that AI is going, let me handle it. So I don't know. I think there's reasons for skepticism. Obviously we have to see, but it's concerning as he would say.
Yeah, it's interesting that these announcements keep coming out on Twitter with no real plan. You mentioned it with the takeover of Twitter. There's been a lot of trial and error that's just announced on Twitter and rolled out in real time. And like you mentioned, Elon was one of the people who signed the open letter for AI labs to pause on developing anything more powerful than GPT-4 for 6 months. And now here he is launching his own AI product. So it'll be interesting to see what happens there. I must note that some AI tokens were up on the news. Singularity Net and Fetch AI both climbed 6% and 3%. Respectively. But we have some breaking news this morning. The SEC is accusing bankrupt crypto lender Celsius Network and former CEO Alex Mashinsky of securities fraud. Joining us now to discuss is CoinDesk regulatory reporter Jack Schickler. Welcome to the show, Jack.
Hi. It's a pleasure to be here as ever.
Always a pleasure to have you. Some big breaking news this morning. Bloomberg is reporting that Alex Mashinsky was arrested following an investigation into the company's collapse. What's happening?
Yep, there's reports in Bloomberg about Celsius Chief Executive Officer Alex Mashinsky being arrested today. What we do know is that the Securities and Exchange Commission has filed charges in court against both Celsius and Mashinsky for, as it puts it, marketing securities while making false and misleading statements to induce investments to purchase both its Celsius token, CEL, and to invest in the Earn Interest program, on which it promised interest as high as 17%. And this SEC case is the latest in a series of actions by the Securities and Exchange Commission against various crypto networks. Although in this case, clearly it is an exchange that has already been in bankruptcy for around a year. So it's in a slightly different situation, but still pretty big news here against the crypto company.
I guess like the kind of obvious question is what took them so long?
Well, yeah. I mean, people watching all the other SEC cases might ask the same question, and the timing is really odd. Why did it take them so long to sue Coinbase? Why did it take them so long to sue Binance? It's certainly not helped regulatory certainty in this sphere in other companies. In the case of Celsius, it's come at a slightly odd time in the bankruptcy proceedings. It declared for bankruptcy in the middle of last year, and the first kind of wave of the crypto winter wrought its toll. And there was an examiner's report into Celsius concluded by a court-appointed examiner in January that concluded some funny business had been apparently going on at Celsius. It said, for example, that they'd been using assets from new investors to repay promises to old investors, which is pretty much the textbook definition of a Ponzi scheme. As it stands, they've just announced, and we're very proud of announcing a sale deal to a new consortium called Fahrenheit, which would have resolved their bankruptcy proceedings. So they're just on the cusp of agreeing this deal, which would have essentially brought them out of bankruptcy proceedings. And now this action happens, which has really put a spanner in the works of all that's going on with the company.
All right, we'll have to wait and see how that story unfolds. You mentioned Coinbase there separately. Coinbase and the SEC are meeting in court for the first time in the federal regulator's lawsuit against the crypto exchange. It feels like we've been speaking about this every day since the lawsuit was brought at the beginning of June. Let's take a step back here. Can you briefly just talk us through the timeline of what's happened from, I think, the lawsuit being filed on June 5th until now?
Sure. Well, we've had a kind of as is usual in this kind of case, a series of ping pong. We had the SEC filing charges in June, as you say. Coinbase filed its defense. Then the SEC filed a defense to the defense saying, no, you're not allowed to make this argument. You're not allowed to make that argument, seeking to strike out, in the legal jargon, some of the arguments they were using. And now we've got the response to the response to the response. Which from Coinbase, which says, we should be allowed to make these major questions of law, and we saw the last instance of that kind of rally happening in a filing late last night. All of this is taking place ahead of a pre-trial, pre-motion hearing that is happening today at 10 a.m. Eastern Time in New York, which will kind of set the scene for this litigation. But if the SEC's action against Ripple is anything to go by, then this is a case that is going to grind on for years and years. So you can see all this as just the opening skirmish in something that is going to keep going for a very long time.
Yeah, what I want to know is where Coinbase is getting this money to, pay for this thing that's going to drag on for years and years. But that's another topic. I just think it's very mysterious. Anyway, speaking of money, Coinbase is also bringing up student debt cancellation, and somehow this is related. Can you break this down for us? What is that argument exactly?
Right. Well, we know that crypto is an evolving area of technology, but the law itself is evolving, and not always in things that to do with crypto. So lots of viewers will remember this big Supreme Court case that happened in June, where it cancelled the Joe Biden's student debt cancellation program, which was worth around $400 billion, because essentially it said if Congress had wanted the Department of Education to have this extraordinary power to cancel student loans, it would have said so explicitly. There would be a line in legislation saying explicitly, by the way, you have the power to cancel student debt if you want to. And there is no such legislation, and this is a major issue of economic and political importance. So you'd have thought Congress would have said so explicitly. And what Coinbase's lawyers are now saying is, actually, this is the same kind of situation. It's a definite analogy for what's happening in the crypto sector. You're taking a whole new sector that's worth around $1 trillion, and the SEC is coming in and saying, even though Congress has never explicitly said so, we think we have the authority to regulate this sector under the existing Securities Act. So Coinbase is saying, look, we've got this judicial doctrine that says agencies are only allowed to act on major issues when Congress has told them they can. And crypto is an exact analogy for this, and they're going to use this argument. They're claiming it adds extra strength to their case in order to assert that, in fact, the SEC has no power to tread into the area of digital assets as it is currently trying to do.
Jack, thank you very much for joining us this morning and breaking down those two stories.
Thank you.
That was CoinDesk regulatory reporter Jack Schickler.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Joining us now to discuss more of the regulatory roller coaster is former SEC Enforcement Branch Chief Braganza law attorney Lisa Braganza. Welcome, Lisa. Lisa, hi, always good to see you. So what's your take on the Celsius news, first of all?
Hi, Emily. I'm sorry. I didn't hear what you led in with. That was off for me. Can you repeat?
Just warmly welcoming you and saying, what is your take on the Celsius news?
This is interesting. The timing is really the interesting part. This is a case that was already brought by the New York Attorney General. We've had the examiner reporting on, the shenanigans. The company is in bankruptcy. So the question I ask is, who really is benefiting from the SEC charging in here?
I guess they couldn't just leave that box unchecked, right? If they're going after all these other companies, right? And then there's Celsius, right? I guess they just have to check the box, right?
That's what it appears to be, because we've got, reportedly criminal authorities have swept in and arrested Mashinsky. So this is one of those cases. And I'm sorry to say, we see this too often with regulators where they just feel like they have to bring a case just to say that they brought a case and have that as,
In their defense, though, that's kind of true, right? There's no way they could be going after, Coinbase, for example, because somebody's going to say, what about Celsius, right? How could you go after these guys, not those guys? So it's kind of a legitimate thing, right? They couldn't really just leave Celsius out there.
I'm thinking about it in terms of, sometimes the CFTC brings a case and the SEC jumps on as, Me Too. We get state regulators jumping in when we have federal regulators in doing Me Too. So it rings a little bit of Me Too. But I understand, the SEC as the regulator of the securities industry would look a little sheepish. And frankly, they probably held off on filing their case at the behest of the Department of Justice. So they may have had a case in the hopper for quite some time, but just held it so that they could coordinate their filing with criminal authorities' action.
Let's switch gears here and talk about Coinbase. We just kind of unpacked what's going on this morning with Jack Schickler in our previous segment. What do you think of Coinbase's new argument here?
Well, Coinbase makes an argument that is really a good one for them. The Supreme Court is talking a lot now about the major questions doctrine, and that means they're going back and looking at legislation that enables administrative agencies to act, and they're saying exactly what does that legislation authorize. And if it doesn't specifically authorize these actions that the agency or the government has taken, and those actions constitute a major question, then that isn't authorized. We have to kick this back to Congress. Here we've got the political football of crypto regulation. We have and I think Coinbase does a great job of laying this out in terms of, first asking the SEC to engage in rulemaking. Next, hearing that getting a Wells notice and filing a writ of mandamus, basically going into court and saying, hey, this is a major question. The SEC should do rulemaking before they take any action. And now the SEC has taken action, and the SEC's position is, look, we can engage in rulemaking at the same time that we are whacking industry participants under what we say the current law is. What Coinbase is saying is that is not legal. You cannot be suing entities like us, and that would include Ripple, under a theory that is not, or under using a power that is not expressly authorized by your current statutes. And by the way, nobody was thinking about crypto back when, the Securities Act was passed in 1933, or the Securities Exchange Act was passed in 1934. So here we've got this tension, though, because we have the SEC saying, look, these are flexible standards. We have the Howey test. This was meant to be flexible. We go back and we look at congressional intent, and it's meant to be flexible. But the Supreme Court is saying now, well, not that flexible. So, this is a shift. And what's interesting is, as Congress, for decades, has enacted laws in the securities area, certainly Congress has deferred a lot to the SEC to make these kinds of determinations because, securities is a pretty complicated area. And now you have the Supreme Court stepping in and saying, but wait, we don't like that when there's a major question that comes up. So we have this clash between what Congress thought the court would be doing when it enacted, Dodd-Frank and Sarbanes-Oxley and all these other statutes, and what the Supreme Court says today they meant, because they didn't mean that at the time, or at least they didn't know that they meant that, if that makes sense.
Yeah, it's interesting you bring up Ripple and a lack of rulemaking, because with the lack of rulemaking, the entire industry is looking for precedent to be set in many of these cases. Could a result in Ripple, which we are expecting in September, change the trajectory of the Coinbase case? Could we see it get resolved much faster than the years that you outlined?
I don't think so. And the reason is a ruling in the Ripple case would merely be a ruling by a district court judge. And that's not going to be satisfying to whichever party loses the Ripple case. So there certainly would be, I think, an appeal there. And it's certainly not going to satisfy whichever party doesn't benefit by it, SEC or Coinbase, in this case. So when you have multiple cases proceeding sort of in parallel, not against the same parties, but the SEC is the same party. Certainly the SEC and Coinbase will talk about that ruling. It will be relevant. It's something that the court hearing the Coinbase case should know about, but it's not binding precedent. The only thing that would bind and require a particular ruling in the Southern District of New York would be a ruling by the U.S. Supreme Court or the Second Circuit Court of Appeals. Those are the bosses of the judges in the Southern District of New York.
Lisa, let's just turn to another topic quickly. Just very confusing moment, because we also have all these spot ETF applications. What do you think is going to happen? Do you think those are going to go through?
I have no idea these days what's going to go through.
Yeah.
Everything is up in the air right now. I think the CFTC, the SEC, everybody's sort of, reconsidering. It's been interesting to see through Coinbase's answer and in its writ and in all the filings that it's made, the detailed process that it went through in order to, do its initial filing as a direct offering, and in pursuing, the rest of its business. So I'm just completely puzzled about what the SEC is going to do, what the CFTC is going to do. And Congress, I'd be delighted if Congress took action, but this is complicated and it's not necessarily something Congress is going to figure out. I mean, that's an awful lot of people who have to come to an agreement, not all of them, but a majority. And it's great that we have, bipartisan legislation being proposed, but there's so much disagreement. And I think the industry and Congress agree that we should be able to go after bad actors. I think that's, nobody's disputing that. But the question is, what about the actors who are trying to find a legal way to operate? We have so many people who want to be in crypto. And we have, a regulatory system that is just tied up in knots.
All right, Lisa, I can tell you you're not our only guest who said they are puzzled over this, so we'll have to wait and see what happens next. We're going to leave
also puzzled, yeah.
Yeah, we're going to leave that there. Lisa, thanks so much for joining the show.
Thank you.
That was former SEC Enforcement Branch Chief. That was former SEC Enforcement Branch Lisa Braganza and a law attorney. Coming up, can Bitcoin break out above $31,000? We'll discuss after the break. Good morning and welcome back to First Mover. Bitcoin has failed twice this week to break out above $31,000. Data from Coindesk shows futures traders are likely responsible for keeping the gains in check. Joining us now to discuss the crypto markets is Forex.com Global Head of Research, Matt Weller. Welcome, Matt.
Hey, thanks. Good to be here.
Awesome to have you here. Let's talk about this producer price index. Final demand increased 0.1% in June, suggesting inflation in the U.S. is likely to continue easing. What's your reaction here?
I think what it suggests is that inflation has continued to ease, and a lot of that is due to what are called base effects. Essentially, at this time last year, inflation was much higher. Now, as we look at the annual numbers, we're replacing those very high inflation numbers from last June with the lower, more reflective of the current environment numbers. So those base effects essentially turn from a headwind for inflation to a tailwind moving forward. So I wouldn't be surprised to see inflation start to tick up. But I think the essence of the question gets at what's really important for risk assets in the crypto market. And that's the idea that inflation has been declining more than expected. And that's something that could potentially signal the end of the Fed's rate hikes cycle as soon as after this month's very likely rate hike at the end of the month. So that could be a very bullish tailwind for risk assets, including cryptocurrencies.
Just looking back a bit further, so Bitcoin, I believe, is up over 80% since the beginning of the year. Like, that's a lot. What's that about, in your view?
The valuations got very compelling. It essentially was beaten down. You guys and I well know how dire the situation looked at the end of last year. And now that it appears that crypto's not going away, Bitcoin's not dead, as it's been proclaimed so many times, there's been a bit of a relief rally. And to me, it looks like a sort of early bull cycle behavior where we bounce off the lows, but now we're entering more of a consolidation, or what bulls would call a reaccumulation period, where the market's sort of pausing, catching its breath. Maybe we even do pull back further from here, but it's not the type of situation where we go back down and make new lows. And we're likely, especially when you consider the halving cycle, approaching another longer term bull market.
You know, we've had economists and analysts on the show calling for a recession near the end of this year or the beginning of next. Does your I guess prediction remain the same? Do you still call this an early bull cycle if we hit a recession at the end of the year?
My view is that any potential recession would be much into 2024 rather than at the end of this year. But it's a very interesting point, especially given some of the economic data we've seen just this month, with non-farm payroll showing its first cracks, with CPI and now PPI today both coming in lower than expected. So if we do see that economic slowdown, I'm not even necessarily sure I'd call it a recession, emerge, that at the margin could be a bearish sign for Bitcoin and other crypto assets. But I think these longer term trends are the types of things that can endure through the recession. And as we all know by now, Bitcoin and crypto assets tend to march to the beat of their own drum, and therefore could actually be relatively well supported, even if we do see a recession affecting other risk assets.
So it's kind of been a news cycle of like all Bitcoin all the time. Any other tokens that are on your radar?
It's so Bitcoin and Ethereum are obviously the big two, but what's really interesting, in the chart just popped up there, is Bitcoin dominance. That's risen from 40% of the crypto market to 50% just in the first 6 months of the year. So there's a reason everyone's talking about Bitcoin. It's the biggest crypto asset, and it's becoming bigger both on an absolute and relative basis. And this is, again, something we see early in the bull market. Some of the smaller tokens that garner a lot of excitement toward the end of a bull market, the skepticism increases toward those as we enter crypto winter, as we have been in. And when traders realize Bitcoin, again, is not dead, that's when it starts to increase its dominance. And if we do enter a new bull cycle for an extended period of time, that's where the first sign of that will be if the Bitcoin dominance starts to roll over and we see some of those other crypto assets picking up pace. So far, we're not seeing that. The first place I'd be watching is Ethereum. And at the moment, the Bitcoin Ethereum ratio is still trending up, or the Ethereum relative to Bitcoin ratio is trending down, is the way it's most commonly seen. So that'll be the place to watch for a turning point that could signal the start of a quote unquote alt season.
Can you tell us a little bit more about your outlook when it comes to Ether? What are your predictions there?
I think it could see explosive moves if and when we enter the next bull cycle. What's really compelling to me is the supply and demand picture. We've seen since the merge, it's been about 300 days or so on an annualized basis, in the depths of a crypto winter with relatively little use of Ethereum, the supply has been declining at a 0.3% annual rate. What could be particularly compelling is if and when we revert to some of the levels we'd seen back in, say, 2017 or even 2021, when we're seeing a lot more usage, a lot more demand for Ether, that not only does increased demand, of course, potentially raise the price, but that also at the same time will be decreasing the supply potentially at a level of 1 or 2% per year. So you can kind of get that double whammy of increasing demand and decreasing supply. And as far as I can tell, that's sort of unique to all other risk assets. And that's why I think could be really compelling in the next bull cycle.
Matt, thank you very much for joining the show this morning.
My pleasure. Thanks for having me.
That was Forex.com Global Head of Research, Matt Weller. We're going to take a short break. Coming up, we'll untangle some threads as Twitter faces new competition from Facebook parent company Meta. That conversation right after this. Welcome back to First Mover. Meta's Threads app saw over 100 million registered users within 5 days of its launch, becoming one of the fastest growing apps in history. But what's behind all of this hype? Emily, you penned an op-ed. I know you have some opinions here on Threads and its relation to Twitter and why it's been able to garner so many users so quickly. Talk us through your op-ed.
Sure. And Jen, I of course want to hear your views too. I know everyone has views on Threads and its meteoric rise. So, okay, first we have to disclaim that we don't know that Threads will ultimately be successful, right? Just having early success doesn't mean that it will last in the long haul. But like just looking at the fact that it got 100 million users in 5 days, that's really notable. And so what I found interesting is why Threads was able to gain that kind of traction when there have been so many attempts to challenge Twitter over the years, right? Like Twitter has been ripe for disruption for years now. People are always complaining about Twitter. People are always dramatically quitting Twitter, writing about why they're quitting Twitter. With Elon Musk, that frustration has kind of like hit a peak, right? So there's been so many opportunities and there have been so many attempts, and yet none of them have gotten even close to this. Now, of course, there are some very obvious reasons, but I still think that there are lessons here. I mean, the obvious reason, obviously, is the tie-in with Instagram. And, the fact that Instagram already has something like, 2 billion monthly active users. And, the onboarding process is linked to Instagram. So you could basically like seamlessly do that. But I think the reason why this is worth looking at is that, it just shows that at the end of the day, onboarding, ease of use, and network effects really are king. And, we can talk all we want about like decentralization and about data privacy, and those are unbelievably important, but on their own, they're probably not enough to bring 100 million people onto a new product.
Emily, I am completely with you there. I think privacy and decentralization are important too, but I don't know if it's going to bring billions and billions of users away from something that they've used for a decade, away from where all their friends and family are, to do what? The one thing I will say here is I agree with you. 100 million users in 5 days is big and notable, but will those 100 million users remain active? I don't know. I'd signed up for Threads just to sign up for it, and I got all of these like random people I haven't spoken to in years. I don't know who to follow. I still go on Twitter every day and am already annoyed by my Threads notifications. I don't know what your experience has been like.
Yeah, I mean, it's also like the question is, Twitter for whatever reason has always punched above its weight in terms of just like sort of a cultural relevance, and Threads arrived with a splash, but like, can it maintain that kind of relevance, or can it even achieve that kind of relevance? I mean, look at Clubhouse. I feel like Clubhouse is kind of a good analogy. Remember when everybody was signing up for Clubhouse and like everyone was talking about Clubhouse and it seemed like everything was happening on Clubhouse? I can't remember the last time anyone mentioned Clubhouse, right? So I think there's, maybe a lesson there. But yeah, like, for the decentralization and data privacy thing, like, again, I mean, I think data privacy is super important, but I think sometimes when people build new products, they overestimate how much of a premium people put on data privacy. And like, let's just sort of be realistic here. Mark Zuckerberg does not have a good reputation on data privacy. I mean, that's kind of a very obvious statement, right? And yet 100 million people were able to sort of move beyond that, So I just feel like if you're building a new product, like, yes, data privacy should be in there. But I think sometimes, and I think we see this in crypto, like people have these really high-minded ideals, but then they like skip over things, or they kind of cut corners on things like onboarding or the user experience, and that's where they have trouble. So I think what we just saw with this is that at the end of the day, people want something where they can just get on it really quickly. And again, network effects, unfortunately, they matter. Now, not everybody has like an Instagram user base to tap into, but it sort of shows that maybe sometimes there's a value in these kinds of strategic alliances. And we see this in crypto sometimes, right? Where like some of these smaller upstarts, like they'll partner with like a bigger, better known brand. And maybe, these are the kind of things that maybe you need to consider if you're really serious about, quote unquote, mainstream adoption.
Yeah, I know Twitter CEO Linda Yaccarino really pointed to the culture of Twitter in her response to Threads. And I tend to agree that Twitter culture I'm not seeing on Threads yet, but it's important to point out Facebook owns, I believe, 4 of the top social media platforms: Facebook, Instagram, WhatsApp. That's 3. I believe the 4th one is YouTube. And so if anyone's going to do it, I think Facebook. But just like you said, Emily, they don't have the same ideals that we advocate for so much in this industry.
Absolutely. And again, everyone was like, oh, I'm so frustrated. I don't want to be subject to the whims of an overly powerful billionaire, but like, I guess I'll just go over to this other overly powerful billionaire, So yeah, in that sense, it's a little bit disappointing in that sense.
Well, maybe Elon's going to be working on his new AI platform, and he'll leave a gap in the market that someone can fill soon. All right, you can read Emily's opinion piece on CoinDesk.com. Emily, thank you for talking us through that. That's it for First Mover today. I'm Jen Sanasi. Thank you so much to my co-host, Emily Parker. We'll be back tomorrow at 9 a.m. Eastern Time. And in the meantime, you can catch the hash at noon right here on CoinDesk TV.